Everybody, welcome to the morning market briefing. It's Wednesday, July 20th, 2022. Hope you're doing well out there. Quick snapshot on where we are as it relates to just market futures. We're in the middle of earnings season. Obviously, a lot of activity going on. Pretty robust day yesterday for equities. Right now, Dow futures down just a smidge, down 14 basis points. S&P futures down 14 basis points. NASDAQ futures down 5 basis points. Again, we are getting earnings kind of trickling in. Ben, before we jump into kind of the headlines, I mean, some resiliency in the market, it seems, at this time.
Yeah, I think the big thing is that earnings aren't coming in quite as bad as we thought they might after some of the retailers reported about a month or two ago. I mean, we'll have commentary that we'll talk about today on JB Hunt, but they basically said, and I quote, "We have had concern from customers on inventory, having the wrong inventory and where it's located, but I've not heard any customers tell us that there's a downturn coming or anything to plan from a large percentage." So that obviously doesn't fit with some of the numbers that we're seeing. But this is JB Hunt. They talked to a bunch of people who are shipping stuff. And I think that that's a general sense that we're seeing a lot. We'll also talk a little bit about Omnicom later on. I have to differentiate that with a Greek letter, obviously, for COVID reasons. But yeah, we'll talk a little bit about that and what their clients are seeing as well. But in general, I think that earnings are coming in, and especially the commentary is coming in a bit better than people had thought.
Yeah, and that's kind of what we've been looking for. I mean, I know going back to the long form discussion I had with Logan, I don't know, maybe a month ago, we were looking for a period in which numbers weren't going to be great, but stocks weren't just getting thumped, 8, 10, 12% to the negative. And we're starting to see that, which, could just be odd nuance within the market, could be misplaced optimism, but also could be a little bit of a reflection of some of this being priced in, being expected. And when things actually get to where they are, at least for the moment, at least for Q2, maybe not quite as bad as some people feared. So we'll continue to keep an eye on that. The Russia gas situation, though, is really the major story right now. We've talked a little bit about the Nord Stream pipeline being down for maintenance, the impact that can have. We've talked about sanctions and kind of the continued impact that may have. Where does Russia stand right now, Ben? How would you kind of explain their positioning?
I think they're trying to walk the tightrope of not releasing more gas and at the same time saying that they're fulfilling their commitments. So right now they're trying to blame it on, you see this all the time with Russia. They have these excuses and say, we're going to follow through on our commitments. The problem is right now they claim that it's a turbine issue and they need the turbine to get back in order to start pumping that gas again. So Putin says that Russia will honor the gas commitments. He says that flows might fall to 20% of capacity if a pipeline turbine undergoes repairs in Canada isn't returned soon. Another turbine is supposed to go for maintenance on July 26th. He said that it's crazy what the West is doing in terms of looking at capping the price of Russian oil, saying that prices will skyrocket in that case. It's very much self-serving, which I don't think is a surprise. Right. I think that ultimately he understands the leverage that he has, but he also wants to have some sense of legitimacy, both within his country and internationally. So he's trying to speak out of both sides of his mouth. Ultimately, I expect him to try to preserve that legitimacy while also looking for opportunities to drive a strategic advantage.
Yeah, it's interesting. I mean, and nobody really knows how it's going to shake out. Probably other than Putin. And I don't even know that he knows right now how it's going to shake out. I think he's still trying to, like you said, he's trying to walk that tightrope until he finds a path of safety. And that could be a couple of different ways. For what it's worth, Goldman expects the pipeline to be back online Thursday at 40% capacity. Meanwhile, the EU's president of the European Commission says, quote, "We have to prepare for a potential full disruption of Russian gas, and that is a likely scenario." The German government says they're working on the assumption that gas will flow again following maintenance of Nord Stream 1 pipeline. So kind of all over the place. How do you think Europe is responding, and do you think their response is appropriate?
Yeah, so I think it's very appropriate. And I think that it is warranted. And I think that they still don't really comprehend just to the extent the damage this could cause. So they are releasing their plan to cut gas consumption today. It's 5 points, or excuse me, 4 points. First point is asking countries to voluntarily curb gas consumption by 15% over the next 8 months. So through the end of March. And they said that if you don't do it voluntarily, it could become binding if the voluntary actions aren't enough. Number two, so good for the UK, now no longer part of the EU. Also good for Switzerland, incidentally. Number two is switch from natural gas to alternatives such as nuclear and coal, which of course raises some ESG issues and
takes time.
And takes time. And also on the nuclear side, we've seen with EDF, you have massive corrosion at some of their plants. They're having to shut those down. Uniper, we talked about EDF being nationalized yesterday. Uniper is going to get a 30% stake bought by the German government. Looks like that's the deal that they're coming out with. The third point is set up auctions that could compensate companies for using less gas. And the fourth is to set mandatory limits on heating and air conditions in public buildings. So the heating limit, so for the winter, you can only heat up to 66 degrees. And in the summer, you can only cool down to 77 degrees, which of course raises the age-old question, would you rather be hot and only go down to 77 degrees in the summer, or would you rather be cold and only be able to heat up to 66 degrees?
I'd rather be cold.
Same.
10 times out of 10.
The 77 degrees in the summer in Europe would be rough.
Yeah.
I mean, you experience that in your office all day.
Yeah. 65 degrees is like perfect temperature. I think I know where I would stand on that. Europe, just a mess. We've got the ECB tomorrow. Meanwhile, UK inflation accelerated. I don't think that's necessarily a surprise. Moved up to 9.4 from 9.1. Mostly due to higher energy prices, but everything's still up. Meanwhile, Draghi has set conditions for not resigning. How do you kind of read through those?
I think it's very interesting when you're losing support in parliament and you ask to resign, and then the president rejects your resignation, and you say, okay, well, in order not to resign, you guys got to do all this. It's a really interesting way of getting what you want to get done. So he wants to give more military support to Ukraine, which some coalitions in Italy do not want to happen. They want negotiations with Russia instead. He's talking for more fiscal reform measures, which again, some parties in Italy do not want. So it'll be interesting to see how this goes forward. They're deliberating right now. But clearly the impact of inflation, the impact of recession, the impact of Ukraine is really disrupting the internal politics of a lot of countries in Europe.
Yeah, and the whole resignation, the refusal to accept resignation is kind of an odd mood. Then coming back and saying, well, if you don't want me to resign, here's what I want. I mean, my dad told me years and years ago, I think I was working at Belk department stores, like my first job, and I had another job lined up. And I remember my dad saying, just remember, if you say you're going to quit, you better quit. Don't threaten, quit. One or the other. So kind of a weird situation. Let's jump into earnings. Netflix up about 6%. They got a little bit of stabilization specifically on subscribers. They were expected to lose 2 million subscribers. Only lost 1, which I guess is good on a relative basis. It seems like the market's kind of reading through that maybe we've seen the bottom on this. Would you agree with that sentiment?
I think that that's definitely a possibility. I mean, you have a trend going from adding 8.7 million subscribers to losing 0.2 to losing 1 to now guidance for next quarter is to gain 1 million subscribers. So that looks like a bottom was in Q2. You also have a content slate that is beginning to accelerate. You had a bunch of legacy companies with a lot of legacy content come to market with their own streaming services. So when Netflix wasn't able to produce new original content during the pandemic, they just unloaded all of their legacy content onto their platforms, which drew eyeballs away from Netflix. But I think that now Netflix is kind of reasserting itself. Its content pipeline is beginning to accelerate a little bit. They are going to push a new advertising tier in early 2023, which will be lower cost. hoping to attract more members and increase profit, which you can argue the strategic benefit of that long term, but certainly they're trying to solve the near-term issues for now. And they're also working to monetize the 100 million plus households that are, quote, enjoying but not directly paying for Netflix. The final piece is when you don't have as much money, you're not going out to restaurants, you're not going to dinner and a movie.
Yep.
You're staying at home, eating pizza that you put in the oven, drinking beer, and watching Netflix.
Yeah, I think they may actually be positioned relatively well given the recession. It seems like they could be a little bit more in demand than maybe they have been for the last, call it 6 to 12 months. ASML, a chip equipment provider, down about 2%. They were up close to 6% yesterday, so I think that does merit a little bit of context there. But they are blaming the supply chain for some of their results. They think demand is still good. They cut their guidance. They're seeing Q3 revenues of 5.1 to 5.4 billion euro, whereas the expectation was 6.5. Ben, what's your read through on this for the chip space overall?
It's tough to be a chip equipment maker in general right now, let alone a chip equipment maker in Europe. And I think that's what's happening to ASML. Basically, they say demand is very strong. A lot of chip companies want to add capacity, which is good for them. Again, they're higher up. They're not actually making the chips, but they're providing the equipment that makes the chips. And their bookings are extremely strong. The question is, can they actually execute on that? And that's a question for ASML. As far as demand goes, though, it seems to be relatively strong.
JB Hunt down a little bit this morning, close to 2% at this point. You noted here, like just an odd conference call. I mean, they did have one of those quotes that we just love to nitpick on calls like this. Quote, I have not heard any customers tell us that there's a downturn coming or anything. So Ben, talk us through JB Hunt, a company that's relatively widely held for clients, but a newer position in the grand scheme of things.
Yeah, so JB Hunt makes a lot of its money from putting stuff on the rails and organizing that. And the rail velocity really declined in the second quarter. There was a lot of inefficiency in rails in general. And the other piece of it is they did have some kind of low priced furniture that there's just way too much low price furniture out there. So that part of the market is really getting hit hard. So JB Hunt saw a little bit of negativity from that, but they have a number of divisions, and the conference call, I listened to it this morning. I didn't read the conference call because I wanted to get a flavor of how they were speaking tonally. And it was just kind of all over the place. I'm doing the write-up now internally, and there just aren't really big takeaways other than, first of all, it was a really boring call to listen to. And then, but secondly, there just isn't really
and that's
much
saying something.
Yeah. There just really isn't that much to take away other than pricing is extremely strong. Bids, they don't have to go out for bid for another couple months. They were asked, is this a top in pricing or not? And they said, well, we don't really know. We're not bidding for another couple months. I think they are exceptionally well run. I think they're very data driven. And right now the data isn't speaking to them clearly. And I think that's the problem, which is why they weren't able to tell a clear story on the conference call and why the market's kind of shrugging despite the numbers that were actually fairly good.
Abbott was up slightly when you sent out the pre-meeting notes, now down about 2.5%. They raised guidance specifically due to COVID tests, but you felt like there's some softness across their more legacy businesses.
Yeah, the medical devices business was just softer than I would have liked. And we saw that for Johnson & Johnson too. Johnson & Johnson said it was a tough comp. So the commentary on the conference call will be very critical. They're ever bullish, these guys. And so I expect the commentary to be bullish on medical devices as well. Currency is going to be a hit. But in general, I'm not thrilled with Abbott. I think that they put a lot into the COVID test, which was good. They made a ton of money on that, but it's not a recurring business. And also the diabetes business, the Freestyle Libre wasn't as strong as I would have liked.
Omnicom, you mentioned a little bit earlier, up 6.8%, and that's holding relatively tight. Pretty good performance, driven in no small part by cost cutting and being able to kind of generate that profitability. when you look at a company like this is not a company that I necessarily expected to be in a favorable position, just given the backdrop of what they actually do in terms of media and marketing, things like that. What do you think is Wall Street seeing that's positive here?
I mean, their organic growth was up 11.3%. That was pretty much in line with where it was first quarter, up 11.9. Now, their guidance for the back half of the year was relatively low. It's up 2 to 3%. So you're talking about a big deceleration. But I think it's just a kind of a cautious view from management. They said that if I had to characterize a point of view, everybody's cautious because of the unknowns that are out there. But most sophisticated marketers who have lived through past recessions know that if they cut back too dearly, they lose sales as the recoveries start to happen. So what does this mean? It means that their customers are actually still spending and they're still advertising. And that's good news for Omnicom at this point in time. And the last one that we had to talk about was Bath and Body Works. Bath and Body Works is that company that's down 10%. Retail continuing to get hit, especially legacy retail. Revenue down 6 to 7%. Prior guide of up kind of 2 to 3% range. Taking down its full year guidance significantly. Just a bad business to be in right now. Their quarter doesn't even finish until the end of the month. So they're already warning on that quarter. But you're still seeing the bifurcation of the economy, whereas JB Hunt and Omnicom, they'll talk about the business remaining relatively good. But Bath and Body Works, not so good.
So many bath businesses. We do have earnings coming in tonight. Tesla, a big one that people will be talking about. Discover, CSX, United Airlines. Which of these stands out to you as one you really want to kind of keep an eye on? None of these are really widely held, if held at all, for us. But
I think the biggest ones, I just continue to be interested in what the consumer is doing, especially the low-end consumer, and then how freight is being shipped. So Discover and CSX are the two that I'll be watching, but I'm sure CNBC will be trained solely onto Tesla.
Yeah, Tesla's going to steal the headlines. I mean, even this morning, I woke up thinking that Tesla was reporting this afternoon, and early this morning, like the headlines on everything were like futures down slightly ahead of Tesla earnings. And I was like, oh, did they announce this morning? But no, it's this afternoon. We're already gearing up for it. It should be interesting. I'm sure we'll get some interesting commentary there as well. So we will report back on that tomorrow morning. We hope you guys have a great day, and we'll talk to you soon.